Hey, episode 86. And today we are turning the tables and I am interviewing Ran Neuner, who is the CEO and founder of Crypto Banter. If you don't know him, Crypto Man Ran, you should check him out on YouTube. He has, I believe, the largest YouTube channel and content distribution platform for crypto related news. He is the guy to listen to when it comes to crypto investing and markets. And he's been doing this for a very long time. He had the first televised crypto show via CNBC back in 2017, I believe. And he had some really big wins and some losses, but he's going to share all of that with us today on the show. I'm very excited to have him here. Welcome, Ran. Welcome to Beyond the Code, the podcast where industry experts and brilliant legal minds discuss the impact of new emerging technologies. I'm your host, Yitzy Hammer, a lawyer and tech enthusiast. Join us as we explore the legal, regulatory, and ethical issues surrounding AI, blockchain, and more. Get ready to go beyond the code and stay ahead of the game. Ran, very, very excited to have you here. Introduce yourself to the audience. Tell them a little bit about who you are. You could start with just a very brief introduction, but then I'm going to deep dive with you.
Okay, so in a nutshell, my name is Ran, Crypto Man Ran, I'm known as. The name came to me when I launched the world's first televised crypto show, which was aired on CNBC. And the producer came to me and said to me, well, you need a name for Twitter. And I was like, well, what do you suggest? He says, well, what about Crypto Man Ran? And that name just basically stuck with me. So who am I? I'm the founder of Crypto Banter, which is today crypto's biggest or most biggest crypto media network. And I'm a father of 4 kids. I'm a crypto investor.
Wow.
Yeah, and I'm an all-round curious guy, and I just enjoy. I'm curious. I enjoy trying to work things out.
What was your first leg into business? All right. I know that you had, I read in your LinkedIn profile that you had the largest sales and marketing agency in Africa and that it was recorded at the time as the biggest business transaction in Africa. So that's all before crypto, right?
Yeah. So you asked me what my first leg into business was. I think that if you had to define me, like there's 2 things that you could say that were kind of, I don't know if I was born with them or I acquired them very, very young. But the first thing is that I am an obsessive compulsive champion, which means that I have to win all the time. And winning means also winning against myself, which is a bit of a problem because 95% of the time, I'm obsessed with beating this thing that doesn't exist. Some people call it paranoia. Some people call it constructive paranoia. But ultimately, most of the time, I'm just competing with this version of myself that doesn't exist, but is usually better than all my competitors combined. So, like if you think about a competitive set, each one of your competitors is good at one thing. And the version of myself that I compete against is the best of every one of my competitors. So it's almost like if you think about what AI is, AI has the best of knowledge of the best of the knowledgeable. It's the same thing with this person that I've been competing with for the last 40 years, or so to speak. Second thing is, I am an entrepreneur, and you define an entrepreneur as someone who always questions the rules, who's always looking for solutions, who's independent, who can't work for other people. I've been that since, I'll tell you a story about when I was 3.5 years old. This is a true story, and it happened in Israel. So my parents in Israel used to work. My dad and my mom used to work.
You grew up in Israel?
For the first 5 years of my life, I grew up in Israel. And I was 3.5 years old
Wow.
at the point where I'm doing the story. And my parents left me with she was like a housekeeper / nanny. She used to do the washing and clean the house. But she was also the nanny that used to take me to daycare, to school. So long story short, at the age of 3.5, my parents threw away a calendar. It was obviously the turn of the new year, and they threw away the old calendar. And I had just learned to use a pair of scissors, and so I cut out all the pictures from the calendar. I literally cut them out. And when the nanny or the cleaner or whatever she was, the helper, went to go and take the washing to the washing room, which was separate from the house, I ran out. and I went door to door selling these pictures. Now, you can imagine, the culture. You can imagine in Haifa walking apartment to apartment and showing people these pictures and collecting coins. I don't know if you remember, but in Israel there used to be a coin which is it was like a with a hole in it. It was
Simon.
a simon,
The hole in it.
and I came back with a pocket full of coins. And asimonim, I don't know if you remember, but they were very heavy. They were heavy coins, and I came back with a pocket full of coins. Only thing is, it was about 4 hours later. And so I arrived back to my grandparents, my mom who had come, and my dad who had come back from work. Everyone was crying. They had lost a child. And I'll never forget the look on my mom's face, because on the one hand, she was so happy to see me, but on the other hand, she was so cross with me. And she hugged me, but it was a hug of like, I can't believe you did this to us. But I was proud because I made money. And that was, you could say, my first entrepreneurial venture. My entrepreneurial ventures never died. I did so many things growing up. I don't know how you grew up, but at school, we always used to get the same lunch. So I used to get the same cheese sandwich every single day at school. And what I did was I started an exchange in primary school, which was junior school, where you paid I don't remember what it was, but call it $1 a month. And then you got to put your lunch in the exchange and take someone else's lunch every single day. So I grew up as an entrepreneur. I've never, ever, ever had a full-time job except for once. I was a stockbroker for 6 months and I was fired. And we can talk about the story of how I was fired or why I was fired, but I was a stockbroker for 6 months. Other than that, I've always been independent, entrepreneurial, and always, always, always obsessed with winning. Unfortunately, I can't do anything unless I'm going to win. And then, or at least unless I think I've got a very, very, very good chance of winning. It's the reason why I gave up paddle now, because I just don't have the bandwidth to get absorbed by playing paddle 7 times a week so that I can be the best in the league. And so I was like, okay, I'd rather not do this. I cannot go to bed every night thinking why I missed a shot, how to hit the shot better. I don't have the bandwidth for that in my life now. So I just decided to stay completely out of it.
So I want to deep dive into so many things here, but now I'm really intrigued because you're talking about this winning obsession. Like, what other hobbies or aspects do you have in your life where you're always winning? Right? You said if you're not winning, you drop it. But what other things outside of crypto banter are you involved in where you're killing it?
So you talk about the inside of our business, which is Crypto Banter. And I mean, there we can dig into it maybe a bit later, and I can explain to you what the winning culture here looks like. When we invest in things, we want to invest in the best people and the best things, and we want them to operate like the best people and the best things. Unfortunately, when I take on a sport, I generally get injured. So why? Because I'll take on gym, and then I'll want to become, I'd want to lose 6 kilograms and put on 6 kilograms of muscle mass in 2 weeks. And then, what I'll inevitably do, I mean, this is a Transact pad. This is a ibuprofen pad, which I had on my elbow. Why? Because I'm also playing polo now. I'm playing polo, and I'm so obsessed with becoming a good polo player that I'm playing 5 times a week. And so, that hurts your back, and that hurts your arms. And, so it's kind of like
your wife put up with you.
So exactly how does my wife put up with me? My wife is an amazing, understanding person who's always given me enough rope to do whatever I want to do, because she knows she can't stop me. And if she does, it's like keeping a bird, a wild bird in a cage,
caging its wings.
And so my wife, I just managed to find the one person who was like, okay, let him do whatever he wants. And she literally lets me do whatever I want. My wife never says you're doing too much or you're not doing too much. Luckily or unluckily, I don't have the same obsession at home. So when I say my room is not the tidiest room, my car is not the tidiest car, I don't care about things like that. It just, there's certain things like sports, like business. By the way, I do believe business is a sport. We can discuss that. Where the obsession bites me. And the problem with OCD, anyone who has OCD will tell you that it's not something that you can learn to manage it. Like I think I've learned to manage large parts of my OCD, but it's not something that you can just forget about or say, hey, I don't want to have this obsession, right? So once somebody asked me to explain what is this OCD, and I'll explain to you what the OCD is. The OCD is when something triggers. So I'll give you an example, right? We redid our office, and my assistant sent me pictures of the office, photos. I wasn't here, and she sent me photos of the office, and they ran out of paint at some point. And so in one of the pictures, coincidentally, you can see that the shade goes darker, lighter. But when I tell you the shade goes darker, lighter, I'm talking to you like
minuscule,
minuscule. She sent me 15 pictures of the office. I guess the response that she was just expecting was, "Wow, this is amazing." And my first sentence to her was, "The blues are not the same." Now, the problem is that it's not that the blues are not the same. The problem is that now in my head, unless and until there's a solution, the problem is the blues are not the same.
You're stuck on that.
So now let me explain to you how it works for those of you who are listening. Maybe you've got it. You remember an old vinyl record? You put onto a Pataphone and it spins and spins and spins around. And remember it had a speed control, right? Remember that you could up it to go faster and slower. So OCD is like the vinyl scratched and keeps jumping back to the same place, and you can't get past it. So remember in those days, you get stuck on a song. So I get stuck on the blues are not the same. The blues are not the same. The blues are not the same. But at the same time, somebody starts to turn up the speed. So it starts off as the blues are not the same, and then it's like the blues are not the same. 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 The blues aren't the same. And it doesn't stop until someone says to you, "Okay, the paint is coming, or I have a solution." So how does that manifest?
That's with your self-awareness.
Exactly. So how does that manifest? As an OCD person, unless you've got a solution for something that you're comfortable that is actually going to work, you can wake up at 3 a.m. and think to yourself, the blues aren't the same. Now, how does that manifest in business? If you're not winning at something and you can't work out why you're not winning, then it becomes, I'm not winning. It must be that I'm speaking too loudly into the mic. Okay, let's turn down the mic. I'm not, and it just goes and goes and goes until you have a solution. Okay, now that can be your best friend or your worst enemy, because on the one hand, it's what I call constructive paranoia, right? You're always competing against this thing that doesn't exist and you're always trying to find a solution. On the other hand, it's paralyzing because you can't move past it. You just can't. You cannot move past it until there's a solution. Everyone's like, what are you worried about the blues? Look how beautiful the shelves are and the art and the lighting, and we've got a wooden bar, and the blues are not the same. You get it? That's OCD.
Brutal. That's brutal.
Yeah.
Okay, but take me back. So, Ran, you grew up in Israel until what age?
Age of 5. My parents, we live in South Africa.
Like proper Israeli, like you spoke Hebrew at home?
מדבר עברית, like we speak Hebrew at home with my family. Like when I speak to my parents, we still speak Hebrew. I'm still Israeli by nature. I'm assertive.
You got that pushy mentality.
Yeah, I'm assertive, and
that's good.
Yeah. At the age of 5, my parents moved to South Africa. Why? Because South Africa needed engineers. South Africa was under this apartheid regime, and no country. It was very similar to sanctions. And no country would support South Africa, or very few countries would support South Africa. And Israel was the one country that would send engineers to South Africa. And so we moved to South Africa for 1 year on a contract, and 45 years later, we're still here. So,
wow.
Yeah.
So your parents, everybody, the whole family's still there.
Yeah. So my brothers have started to leave. 2 of my brothers are in London. And yeah,
all places.
Yeah, exactly. Of all places, they went from the from the
literally.
Yeah, from the bad to the worst. So I grew up in South Africa. I was schooled here. I did college here, university, and then I started a marketing. Well, long business history, but the two probably pertinent points are that I built and sold the biggest marketing business in Africa. And when I left, to go and live in New York and Miami because I'd outgrown South Africa. And I thought that let's go to New York because it's the city of dreams. And if you can make it there, you can make it anywhere. And I went to New York and I went to Miami, and then I did a full circle and I came back to Cape Town in South Africa. And yeah, that's where I am today.
Originally you're from Joburg?
Yeah, originally I'm from Johannesburg.
Okay.
Yeah.
So why'd you go back to South Africa?
So, history. Build and sell the biggest marketing company in Africa. when we sold the marketing company in Africa, we were riding on every single accolade that you can imagine. We were like, I was entrepreneur of the year. I was the national entrepreneur of the year as selected by the president, so to speak. Like, there's a thing here called the
Wow.
National Business Awards, and I was the national business leader of the year. They asked me to join the board of the business, the national business leader board. I was, the EY competition. I was the EY
Yeah. But
globe.
this just came from nowhere. Like,
No,
you
no,
said
we
you
built.
never had a job a day in your life. Like, how did you
No,
become
no. So
this business celebrity?
I was. Look, we
Must have been some hustling there.
there was a lot of hustling. The key points are that there was a lot of hustling in the .com bubble. So I remember I said to you, I had a one job in my life, and that was that I was a stockbroker. I was a stockbroker for 6 months.
Okay.
I was fired from my stockbroking job, and I'll tell you the story. So I was hired by an aging firm to be the young blood that brought in all the money in the .com era. So 1997, 98, I was hired to bring in the Jewish money because I was a young Jewish kid. I was hired to bring in the markets were running. I wanted to, think about crypto bull run. The .com run was exactly the same. There were 50 X's on IPOs every single day. I wanted to make this money, so I decided the best way to do it was to be a stockbroker. I was hired by probably the most aged or the most aging firm. The founder must have been in his 70s or 80s, on his way out. Very, very, very wealthy firm that made their money in gold in the old days in South Africa. South Africa is a gold country.
Yeah.
And I sat there, and I was the youngest trader, and I was the one, because I was the youngest trainee and the only trainee. The owner used to put his trades through me. So he used to stand next to me, speak to his friends, get the information, and then trade and tell me what trades to put through. So I had a good source. At the same time, at this company, I saw that they had billions under management, and most of it wasn't actually being managed because it was like old people. The husband had died. He left money at this firm. He never left instructions. The wife is financially illiterate. Like that was, or old people almost going senile, or old people don't really care. And there was billions under management, billions. So Ran had a master plan. The master plan was go to two of the biggest institutional companies. And one is an institutional stockbroker and one was a private client stockbroker. Separate the two books and sell the current business, the existing business, to these two behemoths on the other side. At the time, though, I was very young and inexperienced, and I didn't know that you're not really allowed to share information about the size of the client book with outside competitor companies. I mean, what I was thinking was, this was the period of mergers and acquisitions. I think I can engineer an acquisition. I thought that the boss would love the fact that I engineered an acquisition. Like, I thought that I'm going to walk in there, I'm going to walk in with an offer. The offer was going to be an unbelievable offer. And the boss was going to look at this offer and say, wow, Ran, I can't believe you sold the business. Congratulations. It couldn't have gone worse. I engineered this buyout. The owner didn't read emails at the time. He was an old guy, so he used to read. You have to give him papers, and he used to read the paper. And so I wrote him the offer on a letter, and I said to him, I walked up to him and I said, here's the letter. Please read it at your convenience. And funny enough, he had like these bifocal glasses, and I'll never forget. He kept reading and looking up and reading and looking up and reading and looking up, and then he looked at me and he said, "Ran, get the fuck out of my office."
You're fired.
No, you get the fuck out of my office. Long story short, 20 minutes later, I was in the boardroom with the head of trading and the human resources manager, and they were threatening me and accusing me of leaking company confidential information to competitors, which I did. I didn't leak client lists or sensitive information, but I guess I leaked size of the book and breakdown of the book, which probably I shouldn't have done. I was young. It didn't come from a bad place. I was just young and inexperienced. Anyway, look, we agreed that they would give me a year's salary, which they did, because I also had a lot of information on them. And they kind of said, look, we'll give you a year's salary, just leave. So I left. But then I had an idea of saying, when I was a stockbroker, people used to call me all the time, and the average conversation used to go something like this. Hi, Ran, what is this stock trading at? And you'd give them the price and you'd put the phone down. And 20 minutes later, the same old lady would phone you and say, "Hi, Ran, what is the stock trading at?" Now, look, this was the period before there was internet stock trading, before there was live prices on the internet. Like, this didn't exist. And I was like, hold on, you can build this using the internet. So I raised money, lots of money, at the age of 25 or whatever it was. And I raised money to build South Africa's first online stock trading portal. And the big vision was you could see live stock prices on the internet and you could trade. And ultimately, that business was called Wealth Maker. And Wealth Maker was an internet portal which allowed people to get financial information and to trade on it. Now, there's a good reason why I'm saying that, because if you think about what I'm doing today, it's exactly the same thing.
Yeah, I'm thinking Banter Bubbles is probably
Well, it's Banter. I started Banter.
Emergence of that early product.
Yes, I started Banter. Anyway, long story short, we built that. We raised millions and millions and millions of dollars because, remember, this didn't exist, and we were E-Trade. We were Charles Schwab, but we were in Africa. At the time, E-Trade and Charles Schwab didn't even exist. In fact, whilst we were building, they launched. And then we were like, shit, we've got an international competitor. What if they come to South Africa? And as we were about to launch in 2000, the dot-com crash happened. And I tried to rescue that business. I tried to raise money. Obviously, internet became a swear word. It was almost impossible to raise any money. And eventually, after trying my best, selling everything that I owned, putting as much as I could, that company went insolvent. And so that company closed down. I had to, I was a CEO. I let down 20, 25 developers that actually worked for me. It was one of the blackest periods of my life, because now I was quite old. I was 26. And the only thing I had on my CV was I was a failed entrepreneur and a stockbroker that got fired. Like, that's the only thing that I had. But you have to understand where I came from. I came from being touted as I was going to be South Africa's youngest CEO of a listed company on the stock exchange. Like, we were about to list on the stock exchange. I was going to be the youngest CEO of a company that was going to list on the stock exchange. I was driving a convertible. I was like the talk of the town. And then it went to absolute zero. And I say zero.
At least you were in good company.
Doesn't matter.
Stock market crash brought everybody down.
Yeah, it doesn't matter, because your finger's still sore. So, like, it doesn't matter that everybody's finger's still sore. Your finger's still sore, and you're feeling your pain. And I had to go back and live with my parents again. Driving a convertible, going back to live with your parents again, with your girlfriend. It's humiliating beyond belief. Not having money to eat sushi with your friends. Like, I remember then sushi was the new thing, and it was very expensive. And like, I used to have to go after eating my mom's meatballs. Then I'd have to go out for my friends.
Oh, I'm not hungry.
Sometimes I was so hungry, and I'd look at the sushi and really want to eat, but I couldn't contribute to the check because I didn't have money.
Wow.
Because I went to zero. You'd see, I went to a place where my parents came to me one day and they said, look, coincidentally, my dad was in between roles at that time, and they came to me at one point and they said, look, we can't help you anymore. Like, we want to, but we've got 5 kids and we can't help you. We can't keep giving you.
Where are you placed in the family?
Number 1, we can't keep giving you $20 for fuel. We just can't. We don't have it. So you have to sort this shit out. So I was at probably one of my lowest points of my life. For 6 months, I threw what I called a pity party. It was where I felt sorry for myself, where I lost my confidence, where I tried to hold on to anything that I had. I tried to hold on to my girlfriend, who I saw no reason for her to stay with me when I was such a failure in life and everyone was succeeding. They talk about in entrepreneurship, they talk about the J curve, and the J curve basically goes down, 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 and then eventually you turn. Most people don't make it all the way down. They back out of the entrepreneurship J curve. But those that do usually break through. So that bottom point of the J curve where you turn, like, have you ever wondered why the J curve turns when the J curve turns? Like, why don't you keep going down, 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 down? So it's a combination of desperation, right? So, an opportunity. So the problem is that if you're evaluating opportunities, there's a cost of evaluating opportunities. Time, effort, energy. Whilst you're evaluating opportunities, you're not producing. So you push that to a point where you do so much research and you evaluate every single opportunity, And what causes most entrepreneurs to turn is the fact that they're about to run out of money and they have to make the best choice that they can with the information that they've got and the resources that they've got. And that's exactly what happened to me. I went all the way down looking for every single opportunity. I had no cash at this time. And there was one business venture that I could actually do. And the business venture was a very interesting business venture. The girlfriend that I had that I mentioned to you, she was funding her university studies with this thing called in-store promotions, which is people standing in supermarkets giving you toothpaste or biscuits or whatever that is. And the one day I went to visit her in the store. And when I went to visit her in the store, like in South Africa, we have like 10,000 supermarkets. And each supermarket has like 70 aisles. In Israel, I know they have very small aisles. We have very big shopping malls. And in the 70 aisles that I walked looking for her, number one, I didn't find her, but there were 3 people per aisle trying to sell you something. And I did some quick maths and I was like, hold on, 70 times 3, 210 times 10,000 stores. Holy shit, this is a big business. And my girlfriend wasn't there, which means that whoever was doing this wasn't doing a great job because they didn't even know if their people were there or not there. She was out walking around shopping in the mall, right? And I was like, hold on, I can do this better. And there's no real barriers of entry here because all you need is people. You don't need money. You don't need to buy tech, infrastructure, etc. And this was really the only business that I could do. So I started an in-store promotions business. I'll tell you a story. I needed 50,000 Rand, which is the equivalent today of $2,500 for an office, a fax machine, an installation of a telephone and internet line, and the first 2 months rent. I needed $3,000 and I didn't have $3,000. And so I went to investors and I said, please give me $3,000. I will give you 50% of my business. That's where I was. That's where I was. 50% of my business. They all said, no, you're uninvestable. You're a failure. You failed at your last venture. You're uninvestable. That $3,000 would have been worth $150 million would have been worth $75 million 15 years later. But at the time, nobody wanted to give it to me. So what did I do? I sold my watch. I had a Rolex, which I loved. And I sold my golf clubs. And I had a partner who was working in a full-time role and giving me his salary to fund the rent of the office. And that's how we bootstrapped our first business. That business, fast forward over 15 years, became the biggest marketing company in Africa. And we sold it for $150 million to a company called Publicis.
Wow.
Yeah. So,
okay, so that was your segue into business.
Into real business,
and successful business, succeeding in business. How did you get into crypto and how did you get into streaming?
Okay, so we built the biggest marketing company in Africa. Now, just to give you an idea of how big this thing was, we were probably 3-4 times the size of our nearest competitor. We were huge. We had offices all over Africa, 70 offices. We had 1,500 people working for us. We won every single award. We were Entrepreneur of the Year. And the one day I walked into my partner's office and I'm like, I want to sell. What are you talking about? Like, we make so much money. I'm like, I want to sell. He's like, why? I said, I can't work harder every day to make more money. He says, what do you mean? I said, the only way we make more money is if we get more clients. And the only way we get more clients is if we open more offices. And the only way we open more offices, we have to open more staff. I didn't know what I was saying, but I said that I'm getting tired.
It wasn't scalable.
It wasn't scalable. It wasn't exponential. It was linear. And I was tired of living in the linear world. I couldn't live in the linear world anymore. I was watching Mark Zuckerberg, who started a business after me, make billions. I was watching Airbnb that started after me, make billions. And I realized that there's this new thing. I didn't know it was called exponential or what exponential was. I didn't know what networks were. All I knew is that there was another formula, which is better than my formula. And all I knew is that I was getting really tired. And so I went on a journey to become exponential. I went to Singularity University. I went to lectures. I went to Harvard for 3 years. And I just sold my business because we decided we're selling. And at the same time, I was transitioning and trying to become exponential. In the journey of trying to become exponential, I discovered crypto. And I left. I was at Harvard. I was at Harvard Business School for a course, and I left the course and I went to one of the CoinDesk things in 2015 or whatever. It was like an early conference, 16, 15. And I realized that crypto was the ultimate in exponential, because crypto is networks. Ultimately, when you're dealing with crypto, you're dealing with networks. And what I realized was that networks were the most exponential business model that exists currently on Earth, right? Because every user adds value to the network exponentially. And what I realized was that networks were the way to go. At the time, I didn't think crypto, but one of our lecturers in Harvard actually broke it down and said, the lecturer walked in and he said, there were two things that happened. The first thing he said, what are the most valuable companies in the world today? And like everyone put up their hands, and it's like Google, Facebook, Amazon, Uber, WhatsApp. Cool, amazing. What do they all have in common? Everyone scratches their head. Oh, they're all technology companies. Yes, of course they are, but what else? And the outcome is that actually what they all have in common is that they're all networks. So like WhatsApp is a chat mobile network. Amazon is a retail network. Google is a data network. The more data it has, the more people use it. The more people use it, the more data it has, the more data it has, the more people use it. WhatsApp is a telecommunications network. The more people use it, the more people have to use it, because that's the only way to contact people. Therefore, the more people use it. So every user adds value to the network exponentially, right? And so we learned about networks. We learned about the power of networks. And the way we learned about the power of networks is actually a very interesting way. The same lecturer came to us and he said, look, I mean, just to give you some setting, you're in Harvard, you're with 200 of the smartest titans in every industry around the world. You're broken into groups of 8 people. And the question is, you are a startup founder. You've been given $3 billion and your mandate is to take on YouTube. You need to take on YouTube. What do you do? And you have a week to work on this assignment. And so we worked on this assignment for a week. And on the Friday, we presented back our findings.
What year is this? 2015?
Around there, 15. I don't remember exact, 16, 15, somewhere around, 16, I think it was. Or maybe even 17, somewhere around there. 16. And I don't remember which year we learned that specific module in, but it was in the 3-year course. And on the Friday, we all present how we're going to disrupt YouTube. And there were some really good ideas, right? And then the lecturers, like we think like he's going to select a team with the best, like the best outcome. And he said, my friends, the answer is that if you're given $3 billion from investors to take on YouTube, you give them back the money and you say, I'm not taking on this challenge. And then you're like, what do you mean? It's very simple. He said, the most powerful business force in the world is a network, because the networks are governed by 2 laws. The first one is Metcalfe's law. Metcalfe's law states that every user adds value to the network exponentially. So just to give your viewers a practical example, if me and Yitzy are the only people on WhatsApp, the total number of calls that you can make on the WhatsApp network is I can call Yitzy and Yitzy can call me, and then the total number of calls is 2. But if you add Bill to the mix, you got 3 users, you've added 1 user. I can call Yitzy, Yitzy can call me, 2 calls. Yitzy can call Bill, Bill can call Yitzy, 4 calls. Bill can call Ran, Ran can call Bill, 6 calls. So we added 1 user to the network and we increased the number of calls from 2 to 6. Okay. And that's what happens every time you add a user to a network. You increase the value of the network exponentially.
Wow.
So Metcalfe's law says that something is a network if every user increases the value of the network exponentially. Then there's a second law, which was a law around telecommunications network, which was created by a guy or founded by a guy called Albert Barabási. Barabási's law says that in the absence of any regulation, users will always flock to the busiest networks. What does that mean? It means if you land in a country and you've got chat app A and WhatsApp, where will you go? You will automatically go to WhatsApp because that's the busiest node, right? Which means that if you combine those 2 laws, which by the way are the 2 laws of network effects, one is that every user will add value to the network exponentially. And 2 is that users will always go to the busiest network, which means that when something has network effect, it can never be stopped. Okay. Unless 3 things happen. There's only 3 ways to stop a network. 1, government intervention. China says there's no WhatsApp in China. They switch off the thing. Unfortunately, that's when networks stop. Bank that thought, because we'll talk about crypto in a second. 2, technological breakdown that isn't repaired within reasonable time. So if WhatsApp goes down for a month, then in the month, it's dead. If it goes down for 3 hours, it's still fine, right? Okay. The third thing that will make us change, and it only has, if you go historically, it very much depends by the sector, but generally a 0.003% chance of working is if you have a product that's 10 times better. Okay, so give an example of where it did and where it didn't work. Where it didn't work is if you look at the SMTP protocol, the internet product, the mail protocol, that has network effects. If you want to write an email protocol today, you have to write it on SMTP, right? And so you can never disrupt that. Even if you have a protocol that's 10 times better, and there are protocols that are 10 times better, you can never disrupt the email protocol. Too much network effects. In chat and social media, there have been probably 2, Snapchat and TikTok, that have succeeded against Facebook and Instagram. Like, just think about that. Or if you think about chat, like there's WhatsApp, which is the world's best. There's Telegram, which has succeeded. And there's WeChat, which succeeded because China government said the other 2 weren't allowed in, right? So there's only 3 times that you can disrupt a network: government intervention, technological breakdown not repaired in reasonable time, and a 10x better competitor has
10x competitor.
Yes. Okay, so now I learned the value of networks, and then I discover that crypto is actually the next generation network. Why? Because Bitcoin is a money network. Why? Because the more people use it, the more people accept it, the more it gets accepted. Money is a network. The US dollar is the biggest network of money in the world, because that's the note that the most merchants accept. Therefore, it's the note with the highest demand. Therefore, it's the one that can't fail. Bitcoin is a store of value network. The more users use it, the more merchants accept it. The more merchants accept it, the more users use it. Ethereum, Solana are supercomputing networks. The more people use them, the more people will build on them. The more people build on them, the more apps will be on them. The more apps will be on them, the more people will use them. Supercomputing networks. And then you realize that actually everything in crypto is all about networks. The only thing is that these networks, governments can't really switch off, because they're distributed. So you've eliminated threat number 1. Out of the 3 threats, you've eliminated 1/3 of the threats to the network. And these networks are not privately owned or owned by a set of people. These are open networks which anyone can own simply by using the network. And that's when the penny dropped for me. And what happened was I immediately, in Hebrew, there's a saying that says Nafalia Simon, which means that the coin dropped. And when I learned, it happened in succession, where I learned about networks, and then I went to this crypto conference, and I was like, oh my goodness, these are just networks, and they're not owned by anyone. They can't be switched off by governments. And then from that point, I became obsessed with crypto. I could not think about anything that wasn't exponential. Only thing is,
kicking in.
I was still the CEO of the marketing company, because I was in my earnout. I was still in a 3-year earnout period. And so I was still technically the CEO. And I come back to the office after being in Harvard and learning about networks. And the office, and I'm talking exponential and they're talking linear. And we just can't talk to each other. It's like I'm talking Mandarin and they talk English.
It must have been so frustrating. Yeah.
It was so frustrating that eventually publicists fired us. We agreed around a table that we would leave and we would forfeit our earnout, which was a massive earnout. We forfeited the earnout and we left. And we did that because I basically said, look, I can make so much more money in crypto. And I was already all in on crypto. I was already lining up, a whole lot of things, including the CNBC show.
Stacking sats.
Yeah, and I was lining up the CNBC show, which was the world's first televised crypto show. So fast forward a little bit. I go to a friend of mine who's a director at CNBC, and we're talking about what I'm doing now. And I'm like, yeah, I'm doing this thing called crypto. He says, what a scam. And I meet him 3 months later. He says, I bought this thing called Bitcoin. And then he starts phoning me. He's like, Ran, why is Litecoin not moving? Why is Litecoin moving so fast today? And I'm like, you see, I told you, you need to have a show on CNBC that just tells people why these crypto assets are moving. And he's like, eventually after calling it a scam and whatever else, he said to me, no, go and talk to the production manager. So I go and talk to the production manager and I explain Bitcoin and ETH to her. And for her, the coin also dropped. And she's like, wow. And she's like, we have to have a show about this. It has to be a weekly 26-minute show and it has to be live. And I'm like, great, amazing. Call me if you need my help. She's like, no, you're doing it. I'm like, whoa, I don't do TV. I don't know. I'm not a TV guy. I've never been in front of a camera in my life. She said, look, we'll teach you TV. You'll teach us crypto. Now, Yitzy, let me tell you a story. In TV, there is one golden rule. You never cancel a show. If people are expecting a show to be aired at 7 o'clock on television, at 7 o'clock, you air the show. So I arrive on Thursday. I arrived 2 hours before my show. They told me to arrive 1 hour. I arrived 2 hours. I'm getting hair and makeup done. And the producer gives me the list of the show of what is going to be on the show. And I look at this list. I'm like, you don't know anything about crypto. This is not crypto. You lie. This is false. No one knew anything about crypto. So I said, look, guys, you can't put me in front of a camera with fake information, wrong information. I can't run the show. So we canceled the show. And the following week, I phoned everybody that I knew in crypto, which was people like Ari Paul, Brock Pierce, Spencer Bogart, all these OGs. And I said, look, I don't really know what I'm doing, but I'm going to phone you at 9 a.m. EST on Thursday. And we're going to on Zoom, and it's going to be a live call, and you're going to talk about crypto. I don't know what we're going to talk about, but we're going to talk about crypto. And that's literally what we did. And we started the world's, and the next, so we didn't know what we were doing. We just did the show. The next morning, a PR company phoned me. And they said, hey, can we have like 2 minutes of your time? We want to do an interview with you. I'm like, about what? They said, well, didn't you launch the world's first televised crypto show yesterday? And I was like, we launched the first.
Did I?
Was that the world's first televised? And it turns out that was the world's first televised crypto show. And so we launched the world's first televised crypto show. So now all of a sudden, CNBC launched the world's first televised crypto show. And I was the CNBC guy. And everybody phoned.
1 second, but I thought you did it on Zoom.
No, you use Zoom as the recording platform, which you then plug into.
And you televised it via CNBC?
It was on CNBC. We were live on CNBC.
Wow.
So we launched the world's first televised crypto show. And then everybody started to phone me. Everybody. Jim Cramer phoned me. Everybody phoned me, bro. Everybody phoned me. And everybody wanted to be on my show. CZ was on my show. Arthur Hayes was on my show. Vitaly. Everybody. I was the CNBC guy. I was CNBC Crypto. Everybody was on the show.
Okay,
and
what year again?
So it started in August 2017.
Wow.
And from 2017 to 2020, I was literally traveling the world. I was a crypto investor. I was retired from the marketing company. I was a crypto investor, literally traveling the world, and everybody was giving me information because they all wanted to be on TV. So literally people were phoning me, hey, my name is CZ. I'm launching an exchange. It's called Binance. Would you like to run the story? I'm like, tell me more about your exchange. Right. I mean, I bought in the Binance ICO, I bought like $10,000, which is the most I could get. I mean, that today would be worth hundreds of millions of dollars. I sold it along the way, obviously. But everybody, so I mean, if you go back into archives, at one point, I was the second most influential person in crypto after Satoshi. So it was like Satoshi, Vitalik, me. Like that's how, in one of the rankings, like to give an idea of like how big this was. Anyway, so we ran the CNBC show for up until COVID. So COVID was 2020 or 2020 was COVID. The reason why I stopped was 2020 was a bear market. 1920 was a bear market for crypto. Running a crypto show in New York during a bear market was really, really tough. Making weekly content was really, really tough. And at the same time, COVID happened. Now, trying to give you some context. When you run a show for CNBC, you have a hair guy, you have a makeup guy, you're running this in a studio. There are teleprompters everywhere. There's 3 cameras on you from every angle. And you arrive and you do a show. And then COVID hit. And I I was supposed to run my show on the Thursday. And the lady said to me, you run it from your bedroom or from your home. I was like, I live in a 3-bedroom apartment with 4 kids in New York. Where do you want me to run the show from exactly? She's like, just find a place. The other guys have done it from their study or from their networks. And I don't think you understand. I have 3 kids under 6 years old here. Like let's just understand what's going on here. My house is there's no way I can run a show on CNBC. I mean, now it's become the norm that you can actually dial in via Zoom, but I'm taking you to pre-COVID days. TV shows happened in studios. Guests arrived in studio, right? So at the time we canceled the show. And a couple of months later, I was like, the reason why I enjoyed the show so much, or the reason why I did the show, was because the show made me a very good investor. Why? Because I was always being
fed access to the pulse.
Yes. Also, because I was obsessed, I had to always know more than everybody else. And therefore I was always reading. And the more I was reading, remember, there's huge information asymmetry, 2017, 2018, 2019. The more you were phoning people, the more you were speaking, the more you were reading, the earlier you were investing. And the earlier you were investing, the more money you were making. And when I stopped doing the CNBC show, I stopped doing my homework because there was no gun to my head to do the homework. And so I started realizing that I became a bad investor. And so I needed to start up again. And so I realized the best way to start up again was to just put on a camera and broadcast on YouTube. And so I didn't have any business intentions. I didn't even have a company. I just put on a camera and broadcast from a coffee shop what I'd learned. I used to study crypto all day. And at 4:00, when the coffee shop closed, I used to pay them an extra $100 to stay open for me. And I would then sit and broadcast from this coffee shop. And while in some of the episodes, you can kind of see the cleaners like cleaning, and you can see them like moving the tables and stuff like that. I'm broadcasting from an empty coffee shop. And it was never supposed to be a business. I was a crypto investor broadcasting from a coffee shop. And then what happened was the market went up and I started to make a lot of money. But my community, or the people that were watching, also started to make a lot of money what was I doing? I was studying crypto. I was making portfolio moves, and then I was broadcasting what I learned.
Sharing your thoughts out loud.
Well, what I learned and what I did. And that's what I did. It was more like a processing mechanism for me. And then it blew up because people started making money. I started to get stopped in the street. People came to me and said, this is 2021. Things were doing 100x. Like, again, just try and think of context. You tell people that this is a good investment, they invest, it launches at 100x, and this happens 5 days a week or 3 days a week. Or, it was one of those things where people thought I had the touch of, it was 90% the market. It was 10% the research. So Banter exploded. Like we were doing, when I say exploded, like just to give you some context, we were getting like 200,000 views per day, per show.
And it was on YouTube at that time?
On YouTube. And we were not commercial. We didn't have any sponsors. We didn't make any money. In 2021, Banter was not commercial. We did not make money. And then something really interesting happened. I invested, it's quite a common story. It's all over the internet. I invested a lot of money into this protocol called Luna. Luna was supposed to replace money. And I was their first investor. And why was I their first investor? Because with CNBC, I was the first Western journalist that went to Korea. I met the founders in the Hashed Accelerator. I met the founders of Luna, which was Do-Kwon and Danny. And I loved what they were doing. They were really good guys. And they were, this whole there's buy Terra, buy Luna. The mechanism was absolutely fantastic. And I was one of their first investors. I probably put in a check. I don't remember the check, but I put in like lots of money, $250,000, $300,000. Then Luna launched and it was trading at like 4 cents and 5 cents and 10 cents and 30 cents. And I just kept buying this thing. And you remember that it went up to like $130. And so I made a lot of money on Luna, Like over 50% of my crypto portfolio was in Luna. And like Luna for me was supposed to be the thing that changed finance. And it was irresponsibly over 50% of my portfolio. It was my biggest position. And then in 4 days,
lunatic, basically.
I was a lunatic. But, I'd been there from the beginning and I drank the Kool-Aid, and anyone that said that it wasn't the future of finance was an idiot. And it's a very common story. People know this because, in blockchain, you can't hide addresses, unfortunately. And people know, I lost $130 million in 4 days on Luna.
Wow.
And yeah, that took me back to, I wasn't at zero, obviously, but remember, I lost all my Luna money, but then the whole market also crashed. So everything that was left, which was Bitcoin, ETH, also went down to 50 to 20% of their value. So my portfolio went from being this big portfolio to 50% gone immediately, and the other 50% reduced to 20% of its value. And that was probably the second time in my life that I got knocked out. The first time was when I went insolvent in the .com company. And the second time was that. And I'll never forget, I phoned one of my business friends, mentors, and I said, his name's Ran, and I said to him, Ran, I don't have the energy to rebuild. It took me, this was like, Luna was the culmination of all the money that I'd made and all the knowledge, like traveling the world for 3 years or 4 years, meeting every single founder, making investments, building, streaming, building. And I lost it all in 4 days. I mean, Luna, unlike most other protocols, which probably die over time, Luna was harsh because Luna died in 4 days. And so I lost all the money in 4 days. And it was a very black period for me, very black. I had banter, we had a whole lot of staff. I lost a lot of money. I remember like being alive, but suffering so much internal pain that I thought, at what point does your body actually die? Like, at what point do you get a heart attack? At what point but the human body, like, is resilient. It just keeps pumping blood into the heart and the brain. And I remember I couldn't even look. I looked at my kids, and I remember like looking at my kids and not even being able to smile. Like, all I thought was, I messed this whole thing up. I could have been this rich guy. I mean, when I was rich, I was talking about buying private jets. And after this happened, when I wanted to come and visit my grandmother in Israel, the discussion with my wife is, how can we afford to all fly business? We should rather all fly economy class. Like, that was the difference in discussions in the realm of a month. Anyway, you can't say it's good to lose money, but something very good happened, because after like probably 2 weeks of really feeling sorry for myself and losing, just being angry at myself, and why did I put 50% of my portfolio into this thing, and how did I not see this, and why did I not listen to the naysayers, and all these lessons. I don't know what happened, but inside of me, like, there was a choice, and the choice was give up or come back fighting. And I almost saw a chart. I don't know, like a chart goes, you know what a higher low is and a lower high. It's like, basically the chart goes up and then it comes down, and then it goes up again and comes down. But the point that it comes down to is not the lowest point. It's like a low point, but it's not
slightly higher than the previous bounce.
Exactly. And I was like, hold on a second. If I can fight back now, then I know how to get there. I've got a roadmap. I've got there before. It's going to be hard, but I can get there. And then I was like, okay, how though? Because you now know, like, you've tasted, you know how to get there. You've tasted wealth. Yitzy, we were so wealthy that I used to look at Instagram posts of Messi on his yacht and think to myself, bro, you should have taken a better yacht, because I'm taking a better yacht than you next time. And, literally there was one night that my wife and I were having a discussion. She said to me, what are you going to do with all this money? And I said to her, well, what do you want? So she knows. I said to her, we can't get a yacht because I get seasick, so I can't really do yachts. I can get onto a yacht for 10 minutes and that's the end of my yacht experience. I cannot do yachts. We spoke about buying a private jet. The problem is we live in Africa, and it's not like if you live in Israel where you're 5 hours away from Europe and 5 hours away from the States. We're 15 hours from anywhere. So if you want to buy a jet that can actually take you somewhere, you need a Boeing. And I wasn't in the market for a Boeing. I wasn't in the market for Air Force One.
Yeah.
So eventually we settled on a private chef. She said, like, I want a chef. I was like, I'm talking to you about millions of dollars, and you're talking about to me about $3,000 a month. Like, is that what? So like that's. So we were so rich, and we went, like, I lost all that money, and I wasn't at zero. I was above zero. I was on the higher low than I was previously, but it was nonetheless a low. And I realized the only way that I could make this money back was I had an asset in Banter. I had a community, I had a streaming platform, I had a newsletter at the time, which had like 30,000 subscribers. And I was like, there has to be a way to monetize this. And if I do, then it's something in my control. And that was the turning point of when Banter started to get monetized.
Yeah, I remember early 2023 getting a couple of contracts from clients who were going to be engaging with you.
Yeah, so for us, like we started monetizing in 2022, because that's when we were like, okay, like this is a real thing. And yeah, I mean, since 2022, we're now in 2025. We have been probably the most well monetized, biggest media network in crypto today. Banter is 17 channels. We own 17 channels. We own a network of influencers. We're the biggest crypto media network in the world today. And that's pretty much how we got here.
And what's it like? Like now it's a different kind of hustle. I know that you stream several times a day. You got like a lot of pressures. I sometimes read the comments on videos. You get a lot of hate. Like, how do you deal with all the hate? I know that like a lot of it is probably just jealousy, but
so yeah, let's talk about all those things individually. So what's it like? I have the time of my life. I love every single moment of it. I love crypto. I love streaming. I love teaching. I love educating. I love investing. I love mentoring. I love it. And if I don't love it, I'm going to stop, because I'm at a point now in my life where I don't work because I need to work and I need the money. And if I don't, I work because I have fun doing what I do, and it's the best use of my time, and outside of being a family man. And if ever it changes, then I'm going to stop. So I'm not doing this because I have to. I'm doing this because this is the most fun that I have every single day of my life. And I love it more than I love anything else. And again, I say, if that ever changes, I'll be the first one to stop, because I don't need to work and I don't really want to work, so to speak. I want to do what I'm doing. I don't want to work. In terms of hate and stuff like that. So initially I used to take it very personally. I used to read the comments and I was like, wow, like people hate me. So it's quite a funny thing, because there's two things that in bull markets,
like they hate you, but they're still there. They're watching all the videos.
Well, exactly. So number one, in bull markets, the ratio of good comments to bad comments is 99-1. In bear markets, the ratio of bad comments to good comments is 50-50. So, right? Most people that are negatively commenting are angry at themselves, and you're just the outlet because you're a face and you were on this journey with them. The second thing is that I realized as to why not to take it personally is I started reading the hate comments on Donald Trump, and I started reading the hate comments on Chamat, and I started reading the hate comments on Elon Musk. And then you realize that the bigger you get, the more fans you're going to get, and the more people are going to use you as a punching bag. And one of the biggest epiphanies that I ever had was I went to a conference. This guy came up to me and he hugged me and he took a selfie with me. And I was like, hey, like, I mean, if I go to a conference, you've probably seen this, like people come and take photos and whatever else. And I said to the guy, give me your Twitter. Like, I'll follow you on Twitter. Like, we were in the mood. And I could see he was reluctant. And I was like, oh, just give me, like, I was like, give me your Twitter. And he's like, cool, I'm this guy on Twitter now. I looked it up. And his Twitter was full of hate towards me and other people, but also me. But in real life, when he wasn't hiding behind the avatar, he was like, bro, give me a hug. Let me take a photo. You understand? So it's like, when you're an avatar, it's really easy
to talk to them about it?
No, because I realized that lots of people do it. And,
wow.
I always say the following. I sometimes read the comments, but for me, the most important thing is do what you do with transparency and with integrity and with a full focus on the mission. And the mission is a very simple mission. Build the most profitable community in the world. That's it. So as long as whatever you do, you can put your hand on your heart and say, I did this because I want to build the most profitable community in the world, then it works. And that's exactly what I do each and every single day. It's the mission at Banter. The mission at Banter is to build the most profitable community in the world. Everything that we do must tick the box of, does this build the most profitable community in the world? You know that we're invested. You were their lawyer, so I'm not going to mention names because I'm not sure if they want us to mention it. But why did we invest? Because if you think about what do, they help in building the most profitable community in the world, right? everything we do is around building the most profitable community in the world. And as long as you're true to the mission and you act with honesty and integrity all the time, then don't worry about what the comments say, because the market will come into equilibrium. And the fact of the matter is that if you look at crypto media channels, very, very, very few of them go from one cycle to the next cycle. Usually you're good in one cycle, you blow yourself up, and then think about, like, everyone knows BitBoy, right? Remember how big BitBoy was? And he blew himself up. And that's usually the cycle for crypto media businesses, or for any finance media business. And I mean, I'm in crypto media now this is my third or fourth cycle, depends what you call a cycle. And here I am, and I'm still one of the biggest. That should tell you something about like, we're doing something right. And what we do right is that we're led by a mission, and everything we do is about that mission. That's it.
Wow. Okay. So thank you for sharing. That was an incredible journey. A lot of stuff there I didn't know. And I told you I wasn't going to talk about markets, but we are still at the beginning of 2026. I'd be very curious to get your general insight on what you think this year holds for crypto.
So the way I see it is, what is crypto? Crypto is a network. Networks are all about technology companies. The big technology companies are all networks. If you look at, and crypto is also a commodity. So why do I say crypto is a commodity? Bitcoin is the gold, the store of value. ETH is the oil that powers the supercomputing network. Without the oil, the machine doesn't work. These are networks and commodities. That's what a crypto asset is: a network, and it's a commodity. If I look at commodity markets and technology markets, both of them have had an unbelievable year, right? Gold and commodities had their best year ever in 2025. And technology had its best year, I don't know ever, but one of the best years that it's ever had. The combination of 24 and 25 for technology was the best that's ever had. The third thing is that if you think about what's driving this whole thing, it's AI. Okay? So if you think about what's driving this, it's AI. What is AI? AI is agents using networks. The first network they use is the internet network. You'll agree with me, right? Like, without the internet, which is a network, agents don't exist.
Yeah.
But they're going to be transacting with one another. That's, agents that can't transact with one another aren't going to work, right? Like, and eventually you're going to say to the agent, listen, just go and buy me a vacation, or go and buy me a car, or like, that's what you're going to do with an agent, right? Or agent, execute market transactions above and below this price, and the agent's just going to execute. Commodity, technology, AI. Those are the three things driving the economy at the moment, right?
Mm-hmm.
And crypto is all of those. Networks, commodities, and it has to be the currency that AI agents use, right? It has to be the currency that AI agents use. So we had a bad year last year. Or did we? Because if you look at the chart up until the 10th of October, we were 35% up, 37% up on Bitcoin. That's a respectable bull market for a $2 trillion asset, right? We had a good year last year. Something broke on the 10th of October. And the problem is that now when we look at it, something broke badly in crypto on the 10th of October. And at the same time, it broke when the 4-year cycle broke, right? That's what happened. Something broke, and it broke when the 4-year cycle broke, when the 4-year cycle should have ended. And so you had this mass panic selling, so to speak. Okay. So what I think is going to happen in 2026? One of two things. Either we have the biggest catch-up trade of all time, where Bitcoin catches up to
Everybody's expectations
to
in gold,
tech plus commodities, or we have to seriously question whether there's something fundamentally wrong with our asset class. I don't think that's even the case, but I do believe that we are due for the biggest catch-up trade of all time. And I believe that markets don't respect calendar years, right? And so, the market doesn't say, oh, well, it's January, therefore I need to go up to close higher or lower. Markets just run with emotions, and emotions are completely random to calendar months, so to speak, right? And so I think if the year would have ended on the 8th of October, we would have all said, okay, great, yay, good year for Bitcoin, 37% up. Could have been maybe better, but good year. Okay, we had a correction. Something broke on the 10th of October. Whatever broke will take 12 weeks to fix itself, because that's what things do. It takes 12. After FTX, it took 12 weeks to fix itself. And now we're starting to see a recovery. So that's what I think. I might be wrong, in which case we, at the end of, if by the end of 2026, we don't get a serious bull run, then we really have to dig deep and say, why is this network not working? Why is the market not pricing this network for what it's worth? What's broken in our asset class? But I don't think that's the case, right? I don't think that's the case. I think that we have a good year for crypto. We have the biggest catch-up trade of all time. And ceteris paribus, all markets continue to run, and Scott Bessent is correct. We have the biggest bull market of our time. And
Amen.
Amen. And if not, then let's question why every market in the world is here and running and at all-time highs, and we're not. And then, like a smart investor knows when to get into something and knows when to get out of something. Now, remember, this is not a religion. This is not a wife, and this is not a football team. You can leave. Your thesis can change, right? On a religion, on a wife, and on a football team, regardless of what happens, whether they win or lose, you can't leave. But I'm supposed you can leave a wife at some point, but you can't leave a religion and you can't leave a football team. But what I'm saying is, there comes a time in every investment's life where you got to say, look, this is not the same investment that I got into. And honestly, if crypto doesn't run by the end of 2026, then we need to ask some very serious questions. But you don't ask the serious question when you've had 3 or 4 bad months in an asset's life cycle, and then you tap out and you say, oh, well, okay, we're out of this game now. No, that's not when you ask the questions.
Ron, thank you for that. And thank you for joining me today. This has been really enjoyable. And I appreciate you sharing with your story with our listeners, and hope to have you back again in the future.
Thank you, my friend. It's good to chat to you when you're not wearing your lawyer's hat and when you're wearing the human hat. Also nice to be on the other side of the camera.
Thank you for listening to Beyond the Code. If you enjoyed this episode, make sure to subscribe, share with your friends, and to tune in again next week for more fun and insightful conversation.